to me, the next wave is going to be around how do we turn these Bitcoin reserves into a productive capital market. It has a lot of the property of gold, but let's be honest, it's not nearly as adopted and accepted as gold. I mean, as Bitcoiners ourselves, right, we always think, Bitcoin is so much better than gold, but the world doesn't think that yet. And we need to kind of understand that the world is not ready to accept Bitcoin as this world currency.
I find this super interesting. You earn revenue in Bitcoin. So it is the beginning of the Bitcoin economy. Hello everyone and welcome back to the Bitcoin Economy Podcast. Today, prices are down, institutions are making moves, and we bring back Marvin to talk about what this means for Maestro, Mezzamine, and the broader Bitcoin economy. I hope you guys enjoyed this wide-ranging conversation. I certainly learned a lot, and I know you will too. All right, so right now it's February 27th, and Bitcoin price is hovering around $65,000. This is kind of tough for a lot of different companies out there. You have treasury companies who were buying thousands of Bitcoin at prices that were 100,000 plus. You have Bitcoin miners that have to finance their hardware. They have to finance energy with increasing energy costs, and Bitcoin price is dropping. So what's going on, and what does this mean for the industry?
Yeah, what's going on is essentially, if you step back, I mean, a recurring story, right? These drops is really part of the Bitcoin story. This last drop is like, 40% plus. And historically, this actually is quite common and can be quite much larger than that, right? So in a way, it's more of the same, but every cycle, there are just new players and new adopters that then are either overly exposed or levered in a way that are unable to really weather these type of drawdowns. So just trying to kind of among the fear and maybe the concern is that this is actually quite historically a common event, and that it doesn't mean that the value proposition of Bitcoin, the economics of Bitcoin, and its utility has changed. It's just as the adoption of these assets happen, we go through these different cycles of overextension and then correction, and just also timing with microeconomics, right? But what for me is more important is, are we moving forward or are we moving backwards, right? So if you step back, the early days of Bitcoin was really much about grassroots adoption. Really this counterculture, cyberpunk, early adopters that believed in the story of Bitcoin, and by buying it and holding it, kind of helped make this network valuable and brought it to the next stage, right? And to me, the next big phase of adoption is when we had this huge increase in 2024 of Bitcoin treasury companies, where now you're seeing mass acquisition and stacking of Bitcoin at the institutional level, through these Bitcoin treasury companies, and also through nation states like the US, but other smaller countries like Bhutan, that are actively mining and stacking Bitcoin. So that was, to me, the second wave of treasury holding and exposure at the institutional level. And to me, the next wave is going to be around how do we turn these Bitcoin reserves into a productive capital market? And what does that mean, right? So once you have an asset that is worth something, that has some kind of intrinsic value, either as a store of wealth, right? It allows you to do what banks do, which is issue credit, able to offer loans, and also allow people to earn yield on their assets. And that, so far hasn't really happened for Bitcoin in a big scale, and that is like the next phase of the market. So regardless of this drawdown, I think a lot of people are realizing that just issuing debt and buying Bitcoin in a treasury company was, our next checkpoint, but it was not the destination, and that you need to go beyond that. And I think that's where, the next winners in Bitcoin are going to be focusing on.
So what you're saying right now is there's a drawdown, but this has happened. We've seen this over and over again. Even though Bitcoin as an economy has only been around for a decade, we've already seen these hyper cycles in crashing even way more. So all the people freaking out right now that their bags are down should not be freaking out as much as they are, and they should be looking more so into the future and what can be built.
Yeah, I mean, I don't want to characterize people as saying they're freaking out. I mean, who is freaking out, right? Like, we shouldn't talk about Bitcoin holders as this one group.
Hmm.
It's really a diverse set of groups, and each have different incentives and reason to hold Bitcoin, right?
Hmm.
Miners have a different incentives than, asset managers and retail. Um, so yeah, I think maybe on the retail side there is some worries. But for example, miners, right now is actually a really good time to mine because the hash rate has actually gone down a lot compared to historical values, which means for every machine that you buy and extend, you're able to mine more Bitcoin. And so now these machines are a lot more profitable. And although that Bitcoin is worth less now, for a miner, right, they're long-term holders of Bitcoin, and so they're always finding ways to acquire Bitcoin at a discount.
Hmm.
And now is a good time to do so. The question is, do you have the dry powder? Do you have the extra capital in order to double down now and accumulate hash rate, accumulate Bitcoin while it's become relatively easier, right? And same thing for asset managers. Some asset managers were over levered on Bitcoin and are feeling the pain right now. But other asset managers actually were waiting for this exact opportunity in order to acquire Bitcoin at a discount. And so, it really depends what's your long-term outlook. Are you trying to make a return within the next year? Did you buy at the top, or are you trying to hold an asset for a decade and maybe use that as like a collateral to take out credit? So, um, short answer is some people are freaking out, but some people are actually quite happy. And smart money will make moves when you have these big drawdowns because it always opens up an opportunity.
So can you maybe double click into what you're describing there? Saying that hash rate is cheaper. So what does that mean? And I feel like there's sometimes a misconception of what hash rate is versus Bitcoin and Bitcoin price. But there's almost like can you explain how that process works?
Yes, so put simply, every time a new block is mined, right now you're mining about 3.3 Bitcoin, right? So that value is fixed until the next halving. But what's not fixed is how many miners are battling out for that 3.3 Bitcoin per block, right? So that's what we call hash rate network difficulty. As more and more miners come online, they're increasing their hash rate, but the actual reward is the same. And so that means for the same amount of hash rate that you add, right, you actually make it harder for everyone else to earn that 3.3 Bitcoin. And so that means it creates kind of like this race condition where at some point it's not worth adding more miners because the cost of hash rate to mine that block is higher than the worth of that block.
And
And
so
so there's a bit of a plug and pull around that. And it's not just correlated with price, right? It's hash rate. You can be seen as like long-term expected value of Bitcoin. So if you think Bitcoin is going to be worth 200K in X amount of month, right, then maybe you're willing to increase your hash rate right now. And maybe right now it feels like it's not very profitable, but you're still acquiring Bitcoin at a cost that will be worth it down the line. And so that's why sometimes hash rate can outrun the price and make mining this Bitcoin more expensive than the actual price, because people think, well, yeah, the price is low now, but I think the price is going to be higher. And so I'm willing to kind of like compete for that Bitcoin. But what's been happening is, as you know, AI is really, affecting the market in a way that like data centers are going crazy, and a lot of miners are actually switching to AI in order to either diversify their income or potentially make more money. AI has its own pros and cons. It can be quite lucrative, but it's also in order of magnitude more complex. A data center for mining is very different from a data center for AI, and especially those latest AI chips require water cooling and load management and all kinds of complex things that if you're really good at it, you can manage, but it is definitely a skill that a lot of miners will have to learn. And I think some miners that switch to AI will be successful, but I do think a lot of them actually will struggle because of the increase in complexity that it takes. And then you have miners that stayed, right? Then the miners that we work with are actually taking the opportunity to double down on mining. Now the competition is a bit lower, and do what they're good at, which is they have cheap access to electricity, they have cheap access to equipment, they know that their profit margins are quite high. And so now that the competition has dropped a little bit, they're able to leverage that to grow their Bitcoin reserves.
So what you're saying is that a lot of these larger miners are switching into AI data centers. So the hash rate, which is the ability to acquire Bitcoin, is the difficulty of it is going down. So because of that, it's a really good time for a miner to come in, or for existing miners that are out there to grow and finance their operation, because they can get Bitcoin for cheaper.
Yes, I mean the word is out. I mean, you can look in the last few days. Actually, hash rate has gone back up a little bit, and you can see that more mining pools are coming online, and that's because and it may not be the same one, right? So as some miners leave, other miners double down, and so you have this redistribution of hash rate across the mining operators, and so people are kind of playing their cards. But so we see both, right? We see really miners that are growing their share of the hash rate that they hadn't had before, and others just switching to a different business model.
Okay, got it. And so the operators that are trying to grow now, like what sort of options do they have out there? How are they growing their operations? And mind you, I spoke with Suresh before. I'm very familiar with Maestro and Mezzamine, and I know that what the team is building is built for this and built for a moment like this. So you talk a little bit more about what product you guys are building to service this market.
Yeah, so essentially we're building, private credit for miners. It's a platform that allows miners to access growth capital to finance operation expansion. And just to step back a little bit, why can't miners, just save up money and then when they have enough, buy more machines and expand? And it's the same reason why banking exists to begin with, right? Any business, that is doing well will try to use credit and debt as a way to supercharge their growth, especially if they know that they have a profitable business, right? Like let's say you have a flower shop or you've got a bakery, and you know that you have these very stable profit margins in your business. You have very good control over your costs, but you are throttled by the amount of bread or flowers you can deliver to customers, right? Because you got this one shop. And so if you can increase the volume, you would make more revenue. And so you can just take your profits and slowly save it. And then, after years of saving, you could just purchase a new bakery, a new building, or a new flower shop and expand your business. And that's one way to do it, right? But what happens more often and what is actually more efficient is you go to a bank and you say, hey, this is my business. You can see that I've been profitable. I'm able to kind of manage my costs. And if I can access financing, I could today expand to a new bakery and then start earning revenue now and basically kick off the compounding effect of my profitable business right away instead of just waiting 2-3 years.
Mm-hmm.
And that's how why our modern society, our industrial economy has gone to grow so quickly is credit is a really critical piece of a thriving economy. But obviously you have to have a good business, right? So if you give credit to people that are running a bad business that is unprofitable, then that leads to bankruptcies and going under, right? So that's why we have these banks that are essentially, evaluating and vetting your business and deciding, is this a business worth investing in? Because I know that they will pay me back and we actually grow the pie for everyone. As a lender, you get able to put your money to work as opposed to have it sit idle in a bank. You lend it to a business, you earn a higher yield, and on the other hand, you're able to use that money to grow these businesses, right? So that's the idea of the velocity of money. If people are just saving and spending, right, that $1 has low velocity. But with credit, you're able to increase the velocity of money, which then helps you grow your economy better. And it gets more complicated than that, but I just want to communicate that this is nothing new, right? This is part of the core fundamentals of why finance and banking exist to begin with. And right now, to bring it back to miners really don't have that much access to financing, right? They're back in the old age where they have to save Bitcoin and then they have to somehow MacGyver a way to acquire more equipment, more locations, and only the 1% of the miners are able to go public. They're able to issue equity, issue debt, and even those 1% of miners that have access to financing, often that financing is very predatory and can lead to a lot of tough loans to pay back because these loans are often denominated in Bitcoin, in dollars. And so you've had the crash of 2022 where a lot of these miners went under is because they were making revenue in Bitcoin, but they had to pay back their loan in dollars. And so when that Bitcoin went down by a lot, 40, 50, 80%, then it made it exponentially harder, right, for them to service their debt. And so in short, right, miners have very few access to financing, and the ones that do have access to predatory financing. And so what we're offering is filling that gap of, can we offer a proper, mature credit market for the mining economy that actually aligns with their incentives? And so that's one side of the market, that's the borrowers. But you always need the other side, the lenders. And so who are going to be those lenders? And traditionally, it's been banks in dollars. And, banks are not aligned with miners. They don't value these mining businesses because they don't see Bitcoin as a long-term asset to hold, right? So it's very hard to negotiate terms with these banks. What makes a lot more sense is raising capital from Bitcoin holders themselves, right? Bitcoin holders and Bitcoin miners both have the same outlook of, I want to accumulate more Bitcoin and I want to hold that Bitcoin over the long term, regardless of the price, right? And that actually simplifies the marketplace a lot. And especially since now you have a lot of Bitcoin that is sitting idle in treasury companies, you've got this what we call latent demand, right? So you have this latent demand of Bitcoin that's been acquired at the institutional level that is looking to be put to work to become productive. And then you have that other little demand from miners that want to expand but struggle to find access to capital. So the logical step is let's allow Bitcoin holders and treasury companies to invest in the mining industry, in mining operations, and in return, they get paid back in block rewards in Bitcoin, right? So these lenders are not getting more dollars; they're getting more Bitcoin on their Bitcoin. So you have this in-kind yield that allows you to compound natively your Bitcoin holding. And regardless of the price of Bitcoin, the burden to pay back the loan is a lot reduced for the miners because as the price of Bitcoin goes down, their payment also goes down in dollar terms because they're paying back the same amount in Bitcoin. So it creates a lot of very virtuous kind of incentives between these two parties.
Yeah, I find this super interesting. The strict Bitcoin denomination. It's not really something that exists out there. And I feel like it works because of Bitcoin mining, you earn revenue in Bitcoin. So it is the beginning of the Bitcoin economy, and obviously mining's the most natural vehicle for this because they earn money in Bitcoin. But I feel like this is early days. This is like day one. We're 10 years into what some people have said is the new global reserve currency. So there might be new economies in the future that do earn revenue in Bitcoin, and they'll need credit markets.
Exactly. I think that's a critical point to make is the reason these Bitcoin denominated loans really work is because miners make revenue in Bitcoin.
Hmm.
And that's the key kind of like requirement because obviously if you use that Bitcoin to buy real estate, which some people do, or buy other businesses that generate revenue in dollars, and your debt needs to be paid back in Bitcoin, then you create this exchange risk. And that's why kind of our first kind of user that we're addressing is the miners because they generate Bitcoin. And you would think that, oh, why would miners want to do that? And actually, given what happened in the last cycle, they're turning around and realizing like, you know what, it's actually probably safer for me to pay back in Bitcoin because yes, maybe in in a bull market, I'm giving a little bit on the upside, but I'm still generating Bitcoin natively. And then in down market, my debt is not exploding in value, and I feel like I have a much more reasonable way to pay it back. And so it really maybe was not this type of law was not popular in last cycle, but now becoming make a lot more sense given kind of like the bust and drawdowns that we've had, and that's really hurt the mining industry.
What,
But to
what do
your
you
point,
think?
like as more businesses earn in Bitcoin, and businesses like ours, where our main revenue is denominated in Bitcoin, then we can also be borrowers and lenders in this kind of Bitcoin capital market, and really create Bitcoin native um, instruments, yield instruments, and credit facilities.
Yeah. So how do you think this plays out in the future? Like phase one, miners. This is the start of the Bitcoin economy. Phase two, probably services businesses like ours that are servicing the Bitcoin miners. Phase three, when does it get to the point where more and more people are transacting in Bitcoin and that becomes the new normal, and then you can build a much broader credit market or much broader economy based around Bitcoin?
Yeah, so it depends on maybe what is your long-term thesis on Bitcoin. Historically, Bitcoin was sold as, a currency or at least a money, so a means of exchange. Um, More recently, it's been defined more as like a store of value or a store of wealth. And I do think it matters because it will define how it's used practically, right? In the real economy. Um, right now, it looks like store of wealth, store of value is most likely what's going to happen, at least in the short term. Maybe long term will be a means of exchange. And so you're going to have this kind of dual system where you're going to have dollars or fiats that are going to continue to inflate, right? the fiat is the only way for fiat to work is through government debt spending, and that's not just a U.S. issue. That's every single fiat currencies, right? So we give the US dollars a hard time often around like debt and deficits, but compared to who? Like everyone is in the same boat, and all these fiat dollars, fiat currencies are inflating and will continue to inflate just because that's how they are structured. The only way to you have to issue more debt to pay the current debt. Um, and so the means of exchange is probably going to still be dollars. It's probably going to be stable coins, right? So stable coins are a huge improvement over traditional rails. Make moving around fiat currencies and stable and dollars like much more efficient, much cheaper. But the question is, do you want to save in dollars, right? And that's where the store of wealth it really comes in. It's you may transact in dollars, but you may save in Bitcoin or other assets, right? Historically, people have been saving in real estate, but real estate is not always great. Like the US, we have great property rights, and so you can own a real estate and you can be like, hey, I really own it, and it's very hard to seize someone's property. But in most countries, uh, property gets seized. You can spend your life saving and buying land and a beautiful house, and then just to see it seized, and that's quite common. And in some of the countries, you can't even own property, right? You can only lease, and so like the idea of private property is not even existent. And then you have gold. Gold is obviously been doing really well, and historically has been a good store of wealth. But gold has its other issues, right? When you buy gold, are you actually buying gold, or are you showing a representation, right? Paper gold, and where is that gold stored? And I think for now it's okay, but you can see how if the gold is stored in these big banks and you only sell paper gold, um, you actually really limit the amount of what you can do with that gold, right? So it's gold is good for like long-term storage, and what you're trading is always these derivatives, which could also have its own issues. And so Bitcoin is kind of in the bit in between, right? It allows you to own it almost like property. You have this self custody. You can travel everywhere and have it on you. It has a lot of the property of gold, but let's be honest, it's not nearly as adopted and accepted as gold.
Mhm.
And that's the case. I mean, as Bitcoiners ourselves, right? We always think Bitcoin is so much better than gold, but the world doesn't think that yet, and we need to kind of understand that the world is not ready to accept Bitcoin as this world currency. It's going to take time, and it's going to be a long transition, and essentially we're in competition, right? So in the same way that the dollar is in competition with the euro and the yen, and you have all these like, different exchange rates, Bitcoin, gold, and other assets are in competition with each other as who will be the best long-term store of value and wealth. And so that's why you have to understand that a lot of these movements is not overnight. It's kind of like a battle between these different types of assets. And as Bitcoiners, we believe that having something that's digital native, that is lives on the internet and can be moved around at the speed of light, but has the property of gold is very attractive because, as you can see, our entire economy is completely online. All our industries are digital, and now with AI, we're just going full throttle on kind of like virtual economies that are moving very quickly. And so, to me, that's why I feel like gold is great for central banks, and there's only a few hundred central banks in the world, and they just sit on assets, which is fine. But for the rest of us, I think saving in something that is a lot more digital native makes a lot more sense. So I'm realizing I did not answer your question. I kind of went off. So maybe you can ask that again, and I'll bring it back home.
Yeah, so you're saying that Bitcoin is a bit of a hybrid, and like what is the current state is Bitcoin is a hybrid of store of value, and you can transact in it. But I think the question is, and the question is, when does it actually get to a point where there is a full Bitcoin economy? How do we go from this hybrid vision of where we are now to the future where there's markets and credit markets and full economies built on Bitcoin? Or is your vision of the future that Bitcoin really does live in this store of value world and continues to interact as like, yes, there's some transactions, but mostly store of value, or does it change more over time?
Yes. No, that's a good question. So essentially, we want to build a Bitcoin capital market.
Hmm.
And so what does that mean, right? So maybe let's bring it back to banking. I think if now banks are very fancy and they offer all these services, but at the core, if you were to strip down a bank
Hmm.
to its main three pillars, what a bank's role is savings, right?
Hmm.
So it accepts deposits and allows to secure deposits and earn some kind of passive yield. Loans, it allows you to go to the bank and either based on your credit score or the amount of money you have in your bank account or whatever criteria they ask, be able to take out a loan, right? To, like we said, fund your business, fund expenses. And then the third one that's also people forget is just investments, kind of money market investment strategies, be able to allocate your capital into different either ETFs or yield opportunities. And so a big part of like banking is managing assets for high worth individuals.
Hmm.
Um, and so I think the vision is we won't have this, you know, this vibrant Bitcoin economy until we build out these kind of basic primitives. And that's really kind of what we're trying to do here with Maestro and Mezzamine is building basically ways to deposit and save in Bitcoin and earn this passive yield in a both secure and principal protected way. Be able to use your collateral that you've put in the bank to take out a line of credit. And so we have this credit product that allows you to draw credit based on the amount of reserves you're able to collateralize and pay back that credit over time. And then having access to investment strategies, right? So we have these yield vaults that combine a lot of different strategies. So we're not just offering yield that's coming from miners, we're also offering strategy yield coming from other yield source, such as market making. So there's a lot of Bitcoin to wrap Bitcoin market making opportunities out there. And so we actually are offering a vault that allows you to fund a market making, entity that is able to earn yields based on trading Bitcoin around on these exchanges. We also have like delta neutral strategies, staking strategies, different types of lending. And so you can see that as you step back, then you end up actually building essentially the rails and the primitives for a Bitcoin first banking system. And it's not officially a bank. I should probably not even say that it's a bank, right? But it is replicating the utility, right, that the banking system offers, but in a Bitcoin denominated way on chain. And once you have these three pillars that is accessible to people, then suddenly you have, I think, this very strong building blocks where you can have this kind of flywheel effect where more deposits attracts more yield, and more yield attracts more asset managers that want to offer more vaults. And then these vaults are basically able to use that growth capital in Bitcoin to use it for productive means. And now I talked earlier about the velocity of money. That's what's missing in Bitcoin is we need to create these capital markets to increase the velocity of money because and that really allows you to create a cohesive system that creates positive yield. If people are just holding Bitcoin and waiting for appreciation, right? You're actually you're lacking that liquidity to fuel these capital markets. So it's very important that we have to build these building blocks that would allow Bitcoin that is idle, sitting on the sideline, be able to actually help companies that are productive that are generating yield and Bitcoin and capital have access to that growth capital to then, you know, um, generate more revenue, and then you kind of the wheel is going. And so that's essentially our thesis: is this types of Bitcoin denominated capital markets will exist. It's just the gap is in the infrastructure and the rails that allows it to basically get bootstrapped.
Yeah, so it starts with replicating the existing financial system. So going back, it starts with building what banks have done very effectively with credit and lending, and that's like the next big step forward, and that's really what's missing in Bitcoin to kick off the economy. And then what happens for phase two for Maestro institutional builds these products, you get more and more adoption. Who adopts it? What happens going forward in the future?
Yeah, so maybe the important point is there's only 21 million Bitcoin, right?
Yeah.
So another way to put it is there are not enough Bitcoin to go around for everyone. And so the natural answer to this is you need to create a credit market and a capital market around it. Because
Hmm.
now the people that have Bitcoin will be highly incentivized to lend their Bitcoin in order for other people to do productive things, right? So it's again the balance between the people that hold the assets and then the people that are doing productive, valuable businesses that need capital. And you'll always have that kind of tug and pull between the two. Um, and so in the short term, our users are on the borrow side, miners that have want to grow their hash rate and have access to very cheap electricity. And the only thing blocking them from growing their business is access to capital. And if they had, access to a loan, they will to, really grow very fast and be quite successful and kind of funnel that revenue back to the lenders. And on the lending side, we're talking to treasury companies, asset managers, just institutions that are holding Bitcoin in large scale, that now holding it idle is no longer cutting it. Their LPs are asking them to find ways, right, to put that Bitcoin to work, but not in like speculative ways, not in ways that risk the Bitcoin being lost for no good reason, but actually investing in like productive means like miners. But from there, right, it will bleed into the rest of the economy. You could imagine governments getting involved, and um, like Bhutan is accumulating a lot of Bitcoin in their central bank, and maybe it will allow them, right, to go to the IMF and be like, hey, I want to take a loan and I want to use my Bitcoin as collateral, right? So now you may have like at the national scale, countries using their Bitcoin reserve as a way to collateralize larger loans in dollars or in other currencies, and allow them to, help their own people, build roads and just, fund government spending. Um, and so then you can kind of like just generalize that to the rest of the economy. So the next users will be people like us, right? Companies that are generating Bitcoin as revenue. Now, we are basically the perfect user of our own products, where we are internally growing our own treasury reserves, right? Over time, we're acquiring revenue in Bitcoin, and most of Maestro's kind of asset stockpile is in Bitcoin. And now, what can we do with that Bitcoin, right? Do we want to raise another round and dilute our equity, or do we want to use our Bitcoin as collateral to take out the loan um, through our own platform and basically able to expand our business in a significant way through these credit programs? And so now we become a lot more independent. We become a lot more versatile. We're not stuck in kind of like the equity VC track, which is very useful at the beginning to get started. But I think a business that is able to fund their own operations and their own expansions without the help of VCs is actually a good sign, right? It shows your business is on escape velocity. And I think a lot of businesses that are accumulating Bitcoin will realize like what they have is a very pristine asset. And then when they go to the banks in this future, they'll be able to like borrow a lot more money than if they had dollars, because now they're holding an asset that is a lot more stronger, to store value. And in the same way that gold right now, like if a lot of countries actually are still on gold. If you go to India, India, Indian, there is this like almost obsession with gold, right? Historically, gold has been very important in the Indian tradition, Indian culture, and a lot of families in India actually store a lot of their wealth in gold. And although the medium income in India is quite low, I'm sure of these families are quite happy because the price of gold has gone 2, 3, 4x in the last couple of years. And it's really lifted them up in a way that now they can use that gold to, um, uh, just kind of help themselves buy a new car or send a kid to universities or whatever it takes, right? So I think the companies that early on, like us, are acquiring Bitcoin, will actually be in a very good situation in the future because now we'll be first in line for lenders that want to lend to us because we have Bitcoin.
Mhm. Well, man, I'm excited, and I'm excited for this future. I feel like this is a good place to wrap up here. And anything else that you wanna share, maybe about what's going on with Maestro, and yeah, and anything that you want to leave our listeners with.
Yeah, and, maybe just to wrap up, like what is Maestro and Mastermind, like how to think about it. So we have three pillars. We have Maestro Developers, which is our data and API business, which powers, top Bitcoin wallets and DEXs and lending protocols. We do billions of APIs in transaction volume. We have also Maestro Institutional, where we offer institutional grade vaults that integrate with custodians and allow you to invest in sophisticated, risk optimized yield strategies. And all of these institutional vaults are focused on Bitcoin yield. And then we have Mezzamine, which is our flagship product. And so it is itself a vault, a yield vault, but focused on generating yield from the miners directly. And so I think that's a good way to kind of see our three pillars and how these three pillars actually build on top of each other and use the technology that we've built to really move up the stack and kind of build these banking rails that we talked about. In terms of what's coming up, we have a new mining program that's going live in very soon, in the next couple of weeks. So we'll make that announcement. We are onboarding first kind of like our strategic partners, investors and people that have been supporting us from the beginning to get access to this program. It offers a very attractive APY in Bitcoin, and also kind of like allows us to work with a top miner in the US that's been growing a lot and is highly profitable. And so we're starting with a small program that will be announced, and then soon after that we'll be launching much larger programs with bigger miners both in the US and abroad that are expanding their business, and basically we're opening the door for treasury companies and asset managers that want to put their Bitcoin to work in a kind of like sophisticated yield instrument that is risk optimized. And we didn't talk too much about the hedging product, but we have a very advanced algorithmic hedging protection solution that allows lenders to recuperate up to 100% of their principal by covering some of these loans. And so we spent a lot of time designing this downside protection hedging call that allows you to basically protect you in the case of big drawdowns like we saw in 2022, and essentially basically protect you from these margin calls and recuperate your entire loan. So these loans are a lot more sophisticated and optimized than previous cycles. They're they're designed specifically from the learnings and the failures of the previous cycle. And so they offer a risk factor that now is a lot more institutional grade. And I think it's going to be very popular and going to attract a lot of the larger asset managers that have been waiting for that type of product to go live.
Man, well, it's exciting. I feel like we have a lot more to talk about, especially with some of the other features, the downside protection. Yeah, let's definitely chat once these programs are live as well.
Yeah, absolutely.
Cool. Well, thanks for jumping on, and thanks everyone for listening to the Bitcoin Economy podcast. And until next time.